So let us start at nearly 12:15 sharp, and it's great to see all of us here on a very nice summer day. And as the origins of this particular event date back to the gathering in Cēsis in Lampa, when we met a number of the speakers and agreed that we shall still try to do an event this summer on the blockchain technology as part of the fintech action plan. So I guess the best events are the ones that come together like this. And given the amount of interest, we've arranged for an overflow room, which is also nicely air-conditioned with the streaming through Facebook. So I think we have the standing party having gone to the overflow room. So without further ado, I will start with a brief introduction. First of all, tremendous thanks to the representation of the European Commission for hosting us here today, and to our partner Eversheds Bitāns law offices for supporting the event. And the event would not be possible without the partnership of a number of institutions, including Latvijas Banka, the Estonian Banking Association, the two blockchain associations of Latvia, which I heard over the initial coffee have now agreed to merge. So that's very good news for all of us looking for a strong partner in the blockchain space here. In terms of the priorities of the Finance Latvia Association, which has itself come into existence on July 12th, when the members of the Association of Latvian Commercial Banks voted to expand the activities of the association and to change also the name befitting to the way we've actually been working over the last year, which is bringing together a range of industry players in the finance related services and the technology to put in action the vision of Latvian financial services being at the forefront of both the cooperation and the digitally savvy service provision across the banking union, which is the second largest banking market in the world. In terms of the priorities of the association, they will remain as defined last year. We're working on the issues related to development, technology, and compliance, with the respective visions being that we're definitely looking at developing higher value-added service provision from within Latvia and to the benefit of the Latvian economy. In terms of the technology, we've set quite an ambitious vision that we are working towards the most digitally advanced services by 2022, and in terms of compliance, very clearly working towards the highest compliance standards in the financial sector here. And the origins of the series of events that we've been holding on the fintech issues date back to us coming together here in Latvia as 9 industry associations and submitting to the European Commission response to the fintech consultation paper, where we outlined why we believe we are, relatively speaking, quite developed in terms of digital services here in Latvia relative to the rest of Europe. What do we want to have achieved at the European level in terms of regulations and the approach to regulation, and what do we want to have achieved in Latvia? And as we will go through today, we'll also look back at one of the issues we identified jointly as priority for this year, which was introducing the remote electronic identification of customers finally here, which we've managed to achieve, and the cabinet regulations have been adopted. So one very practical outcome of this collaboration from all involved. We then had a follow-on discussion this March after a series of smaller events over the last fall with Mr. Dombrovskis here in Riga launching the EU Fintech Action Plan. And at that point we agreed with the European Commission that we will actually be looking to deepen the Baltic discussion and participation of the Baltic partners in the making of these policies and making of these proposals through the various working groups. And we're glad to have one member of the blockchain working group here among us as well. We'll be able to share those perspectives. In terms of the industry and the association, where we see all of this as part of the open digital finance framework that the Council adopted last December, which spells out the priorities for 2018, and most likely some of these will still be priorities in 2019, where we're working towards a number of larger topics, which is discussions around the use of and reuse of data in the public registries for the benefit of the consumers here in Latvia, where we need to advance further. So there might be, maybe down the road, some of the ideas that come through today's discussion actually help towards this effort. There's a lot still to be done around sharing of the information between private parties and private and public parties, again, for the benefit of the consumers. We mentioned the remote electronic identification, which we're glad, at least in terms of the framework level, has been set out. And not least, we see that the consumers in the Latvian and also the Baltic market actually changing their behavior much faster than the SMEs in the local market. And so that's an open question of how we engage further with the SMEs that they benefit from the European digital developments. And so in terms of the agenda today, we've set out to have a keynote address by Mr. Zilgalvis as the co-chair of the EU FinTech Task Force, and we're glad that we will have a number of other presentations to stimulate the discussion that will be moderated by Mr. Zilgalvis, that will then be followed by the coffee break, after which we will delve into one specific policy development that I already mentioned, which is introduction of remote electronic identification for the Latvian financial sector players and the framework conditions that the Cabinet of Ministers regulations set out. So as we were heavily involved in drafting these regulations, of course, with the Ministry of Finance, Ministry of Justice, and the Financial Capital Markets Commission, we felt that broader knowledge on the market of how the different provisions came about will only be helpful for speedier adoption of these practices. And in terms of some of the practicalities, the event is on record. We are being broadcasted on the European Commission Representation's Facebook page. We'll be looking to use certain bits and pieces from the discussion for policy discussion purposes later throughout the year. And also importantly, we've set out to consolidate the ideas emanating from the discussion and see how we will feed these into the discussions at the Latvian and the EU level going forward. So with that, let me pass on to Mr. Zilgalvis for the keynote address, and we'll take it forward.
Thank you very much for this very nice welcome. As you see, I'm on my holiday, so I've come directly from my holiday, and I'm a bit more informal than I am usually in this picture and in other places, and hopefully I'll get back into the work rhythm for this discussion. But the main thing that I really want to pass a message to you these days, today, is that the European Commission has a very pro-innovation, a very supportive attitude towards blockchain technologies, to fintech in general. Sanda mentioned the FinTech Action Plan, which we produced, which came out with a whole set of actions, one of which is the European Blockchain Initiative, which started with FinTech but goes much more broadly. Those of you who work in blockchain know it has application to supply chains, to other types of services, health, etc. And we have ambitions in all of them. That doesn't mean by any means that we forget the financial applications. And let me see, here I can advance. So the discussion today is European leadership in a digital technology. The European Blockchain Partnership aims for a cross-border blockchain services infrastructure. This is coming out of a declaration that was signed on the 10th of April at European Digital Day, which is something led by our commissioner, Maria Gabriel. The FinTech Action Plan is also in collaboration with our own Vice President, Valdis Dombrovskis, but the Digital Single Market is Maria Gabriel, who I work directly for. And what we were looking at here, the goal for Europe to take a global lead in the rollout and uptake of blockchain infrastructure technology. Where should we intervene? This should be for the public sector. Ideally, public sector initiatives to carry as well a lot of benefits for the banks, other private sector actors. I mean, one of the examples being a model, the ARPANET, which became the internet, coming out of a United States innovation procurement, coming out of the DARPA program, the Department of Defense. So we have a similar idea here of supporting blockchain for cross-border services. We have basically all the member states having signed up now, plus Norway. I think Italy is signing this week, and Croatia and Cyprus have said they were going to sign. Latvia was one of the original signatories, and everyone else has signed. As I mentioned, it will concentrate on this infrastructure, which can support cross-border digital public services by public authorities, and in the future, enable it to be used by startups and other innovators, as well as the services, the platforms, and so on would probably be bought by an innovation procurement. So we're not going to have our IT people in the European Commission trying to build a new blockchain, but to buy something that is out there that is fit for the public services, that's compliant with network information security and other requirements. This is unique because, as I say, it should be fully compliant with the European Union acquis. If you have a so-called serious sector, whether it's finance or health or transport, you can't have something that's just saying, well, whatever happens, happens. The infrastructure, and in this case, if it's providing a service, has to be compliant. We want to leverage EU tools existing, such as EID, e-authentication, not to set up, again, new ones, though obviously it could collaborate with other private sector offers. Supporting interoperability and open source, the idea that the solution would be open source and interoperable with things like Ethereum, Bitcoin, R3, etc., that are out there. And it would be built, as I already mentioned, through innovation procurement with the intention of stimulating startups. I think I didn't advance here. There I am. Okay, so what is our calendar, our agenda by September? So that's basically now, you could say, and we're working with the member states. We have a European Blockchain Partnership Member States Working Group to identify the use cases. I can already signal that the first ones will probably be RegTech, regulatory reporting, things that are already required. Obviously, some issues like digitalized health records, other things that aren't digital yet, isn't easy to do rapidly on a blockchain because it's not digital yet. By the end of the year, to have the functional specifications, and the idea would have the first services rolled out already next year, which is putting us in a very leading role along with Dubai, Smart Dubai, who we know as well. But in fact, the United States just came to us very recently, the Chinese, others, and say that, okay, Europe is really ahead on this, and this is very interesting. Can we pilot with you? And of course, we're being a bit cautious on how we would pilot with other parts of the world because we have to make sure that the thing works between our member states before going more broadly. Something else that supports this, and we're going to hear a little bit about it from one of the experts who's involved there, is the European Blockchain Observatory and Forum. The partnership is the member states, so Latvia, Estonia, Lithuania, I think France is also represented here. The observatory is experts, the industry, people coming from NGOs, and the idea is to have an expertise hub to access, share, and produce and disseminate information. There's a map of existing initiatives. If you have a blockchain initiative and it isn't on the map yet, please put it there if you want publicity for it. It's a way also to find partners and find perhaps investors if it's a private sector initiative, to monitor technical developments and trends, develop expertise in community building, address sectoral and cross-cutting issues, interoperability, legal, governance. to build on EU interest use cases to support what we're doing. And I can signal a few things. We're coming, as many of you know, to the end of this College of Commissioners. This government will have new commissioners appointed next year, or commissioners reappointed. So the legislative machine has slowed down or almost stopped, other than things that have already been proposed. So looking to the next commission with the observatory and the member states, we're analyzing things like smart contracts, initial coin offerings, secondary markets for initial coin offerings that might, and I have to underline might, be the subject of legislative initiatives, but that obviously has to be based on an evidence base and inputs. 3 pillars. You have the public face, the blockchain knowledge repository. Here's information about the forum, thematic reports. We have reports on the General Data Protection Regulation in blockchain, blockchain innovation in Europe, e-identity in blockchain, case studies, videos, frequently asked questions. The blockchain map, again, I think it needs to be populated more from the Baltics. I know we have more things going on than are signified there. Something might be because you want to keep things quiet commercially for a reason, which is obviously fine. But if you want to get publicity, go there. And then there's also a open forum discussion. So if you also want to see what other people are doing, if you want to network, that's there. Also exchange of information on different solutions on e-identity and so on. And you have the expert groups that are also here. There's one that is on legal and framework conditions, and the other one that is on use cases and transition scenarios. Giannis, who is here, who will be speaking later, is one of the experts who was chosen for that. And again, they are giving us inputs for both building this European blockchain partnership, us and the member states, and also for any future policy initiatives we might undertake. Here's where you can find us, and I'm happy that this presentation is distributed and disseminated. You can put it everywhere, so you don't have to write it down. But here's where you can find the blockchain forum. Here's where you can follow it on Twitter. Here's where you can register for the EU blockchain community. And here's where you can find me, and then I say thank you, and I think we can stay within the time allotted, and I'll see you again with the panel in a few minutes.
Okay, ladies and gentlemen, I'm the next one. All right. So again, thank you so much for coming, and welcome from a humble supporter of this event. And thank you, Finance Latvia Association, for doing this. I'm still getting to this new name, but it's a great name. Finance Latvia Association is now the name, and for the European Commission for doing this. So I am just a practitioner. I'm a realist, a little bit of visionary as well. But in the essence, I'm just a lawyer, right? And what can a lawyer tell you about blockchain and things like that? Well, lawyer can tell you something about the law and regulations. So this I am going to speak about, some regulations. But then I thought, on such a fantastic summer day, when you don't think much about regulations, right? You think about sea, you think about sun, you think about sand, right? So therefore, I will talk about regulatory sandboxes. So a bit relevant topic. And I also have to say that, in preparing for this topic, we gathered vast amount of information, but don't be afraid, I will stick within the 10 minutes. But I have to say many thanks to my colleagues Lionel Elde and Sanda. We have massive amount of background information for this subject now. But regulatory sandboxes, it is very interesting and actually relevant topic, because these are the platforms where those fintech companies can be set up, they can operate, live, and prepare for the big game, prepare for the compliant game, prepare for actual work, compliant with the rules and regulations as they should. So this is what the regulatory sandbox is. And when we look at the world, I mean, the footprint is very impressive. These regulatory sandboxes, I would say, if you look at it, I would say it's Asia, right? It's Asia, it's definitely Europe, it's North America, the most popular spots for these regulatory sandboxes. And, if we were doing this in Asia, probably there would be people saying, Asia is the leader. But based on all the research, I can say with quite a confidence that actually Europe is the leader, or seems to be the leader in driving these technologies and actually also accustoming the regulatory base. And we will get into a little bit of those details, but obviously we cannot cover everything within these few minutes. But just let me give a few examples what a regulatory sandbox really is. So what are the criteria? I think the first, and doesn't it across the world, it just needs to be open. Right, the regulator needs to pick up the phone calls from the companies. The regulator needs to be able to speak to the companies, explain. And I think this is the one very single fundamental attitude point, because the fintech companies need to feel that the state, the regulator, is welcoming, that they are speaking in their own language and try to, get to the solution together. I think this is the single most important thing. But then, of course, other things. So what else? There needs to be a certain process, how these fintech companies get onto the platform. It cannot be too bureaucratic, because I think, 2-3 months is an optimum timing for these fintech companies to register, get into the platform, and start the testing operations. Then another thing is security. Yes, so usually these when a fintech company gets into the kind of the fully operational sandbox, it needs to be kind of secure in terms of the clients, because it is not yet regulated, it's not yet probably fully compliant. So usually they would put something like 100 clients as a limit. They would put certain limits on the operation with real money. Usually these projects also operate with just, imaginary money. So this is this security concept. And then there needs to be a clear path to graduation. By graduation, I'm meaning the exiting the regulatory box, getting compliant, and getting into the market and doing the business. So this is in a nutshell what these regulatory sandboxes do and how they operate. And when we look at these geographics still, of course, this is a new thing. There is no history. Like when Latvia became independent, we could renew our constitution, we could renew our civil law, right? But there is no something like, a blockchain law was not in place 100 years ago. So, and this is across the entire world. And we see countries taking extremely, also actually different approaches. We can take a look at Singapore, and we take a look at Hong Kong, very different approaches in Asia. We can take a look, for instance, in Germany and Switzerland. We will see Switzerland putting in a fully functional regulatory sandbox and thinking about it. Germans taking a more cautious approach, but I like Germans because the Germans, our legal system, by the way, is German law based. And Germans go easy. They say, okay, well, we learn how to apply our law, and they basically say, okay, when it comes to fintech, when it comes to, for instance, they say ICO. What is ICO? They say ICO is IPO, right? So because our laws are applied by analogy, and this is just the way to apply the law properly, right? And also, other things like that. So therefore, it's very diverse very, very diverse way how different countries are applying these laws and setting up the sandboxes. Now we will take just a look at few of those examples, and I can highlight the most relevant, just few ideas from several jurisdictions. UK clearly needs to be mentioned. UK is the pioneer. UK has a fully functional sandbox, but not only one. In one sandbox, they already have 5 sub-sandboxes, right? They call them cohorts. And the companies register there, they test, they graduate, and it's already, you can see, 276 applications received, and it's already starting the cohort 5. I myself, our law firm, we had the opportunity to, for instance, work on one of the projects together with, our UK colleagues. It's 2030. I just spoke with them very briefly yesterday as well. It's an interesting fintech company who will test their solution together with London Stock Exchange. I must admit, it's a crypto related, it's Ethereum infrastructure related, but it's also something which they're developing together, and the London Stock Exchange will also play ball and get involved. And so you can see you can take a look at if you want to see real practice examples, this UK's sandbox is the one where to take a look, because they publish it all. So, going on Singapore, an interesting example from Asia. Singapore also very progressive, putting a sandbox in place. There are already graduates. This, for instance, this policy PAL one, it is the insurance policies based financial technology solution where people can get easier access and can manage their various insurance data. And what is interesting for Singapore is they have put those hardcore things which cannot be, there is non-negotiable items like AML, like fit and proper criteria for honesty, data protection, handling of customers' monies and assets. That is non-negotiable also for fintechs. And there are the items which we can say where is more, where the regulatory regimes can adjust to facilitate fintech operations, like capital requirements, liquidity requirements, things like that. So that is interesting also in terms of our policy making as an experience. This slide shows the life cycle of a project in a regulatory sandbox. I will not repeat myself, so it's an application, pretty fast, evaluation, and experimentation stage. Switzerland is very interesting because it's very close. Swiss legal system, extremely close to our legal system. Their civil code, also very close to our civil code. And Switzerland is in Europe one of the most advanced in actually putting the regulation already in place. They allow fintech companies to take public deposits up to a certain amount. Who can guess or who knows what is the amount in Switzerland without regulation for fintech company to get public money? What do you think? $1 million francs, so bingo. 1 million, but it's without regulation. But there are 2 criteria. Do you know what about getting this money? It cannot be reinvested, and it has to be interest-free. So this fintech has to actually convince with its technology the users to put the money in without an interest and on the obligation not to reinvest it, and plus it has to be extremely liquid. Returnable upon first request. But you see without any regulation, and once they get over this 1 million, they need to apply for this fintech license thing, which is from 1 million to 100 million Swiss francs. again, a more relaxed regulatory environment. Very interesting experience. From Belgium, I can mention only one thing. They are adding an interesting tax incentive. They are looking for talent. And they are putting those most talented, I don't know how they actually, evaluate them, but probably by education. There's a tax incentive. They can get 30% from their payroll taxes back, or let's say reduce their payroll taxes in their own pocket by 30% if the highly qualified experts get involved into the fintechs. So that's a tax incentive. What we are doing in the Baltics. In the Baltics, the regulatory sandboxes idea has not passed unnoticed. Bank of Lithuania, which is the regulator in Lithuania, is putting in place a regulatory sandbox as a fully operational, as they say, as of next year, right? So, but let's see whether they will actually deliver on it. So far, so it's the planning, but they have also opened their consultation resource. They're also very welcoming to fintechs. Estonians also going the same way. They are also creating a live testing environment sandbox, but that's also not yet fully operational. They are on the way. In Latvia, what we are doing in Latvia? In Latvia, there are two very nice persons, Gunta and what was the name of the other person? A very, welcoming young lawyer who are picking up the phone calls, and they are actually speaking to the people. They are speaking to the fintechs. They're explaining the path to regulation, explaining the path to licensing. So Latvia's FCMC have also opened a regulatory sandbox, which is more, demonstrating the openness, speaking to the people and consulting them. So far, Latvia is taking this pragmatic approach in a way that there is no plan to actually set up a fully functional, testing sandbox. But I would say also for Latvia, every country needs to think about its own resource, it's about its capability, and it makes sense. Yes, so there is no one pattern that fits all. In my opinion, putting regulatory sandbox also in Latvia could probably be already like yesterday's news. Maybe in Latvia the best way for regulator is to team up with the business and with in these technologies hubs to work together, develop and facilitate. And I was also saying to the Ministry of Justice, it's not the Ministries of Justice fault that there is no regulation in place, because this is, the business needs to drive it, right? And then the regulation needs to follow sensibly. But one action point in which I would like to basically close is for Latvia. For Latvia, I think the most important would be, it's like with Brexit. What businesses want from Brexit? Tell me one word. They are not afraid from Brexit, but they want what? What do you think? What businesses really want? Clarity, exactly. And this is what the fintechs want from the state, clarity. And it's not only FCMC, it's other institutions as well which need to come together. It's FCMC, yes, but it's also Consumer Rights Protection Bureau. It's the State Data Inspectorate. And definitely last but not least, tell me one other very important, agency collecting money, State Revenue Service. Yes, all these four need to come together and deliver just the clarity for fintechs, how they can operate in Latvia. And that is the one action point on which the government, not on changing laws, but on changing the approach and clarity, need to deliver. And just to finish, and I will not repeat what you already said, EU is definitely putting together the experiences from all the member states. there is this action plan how to harness the opportunities presented by fintech. And one special, you are also putting together a blueprint with best practices on regulatory sandboxes. And then, you know, depending on that, I think also Latvia and other EU countries can take their best route going forward. So, ladies and gentlemen, it was a great pleasure to speak to you today. And so, just a few things. You know, main thing is to share information. Don't copy, but share and take the best out of it. And stay until the end of the event. Thank you. Bye-bye.
Okay, thank you. I'm Justinas Jurkonis from Swedbank, from Open Banking Unit, and today I would like to share with you one of my feasibility studies, what I'm leading now, and some insights about that share with you. First, as use case, we took for the blockchain, like feasibility study, we took use case for alias payments. Alias, I mean, just to explain in short, it's an alternative attribute for IBAN, bank account, to map with some, it can be like phone number, social network ID, it can be email, whatever it's agreed. So to map this into the alias, like, and as Justinas, I want to make a payment to someone else, and I just as money sender need to know just a beneficiary's phone number, for example, and sending very easy and very fast like money. That's all. So we took this use case as a first one and looked around. Like in Europe, there is alias proxies. Those payments are working in the country, like in Sweden, Swish, PM is in UK, MBWay is in Portuguese, and Pinget for Barclays, yeah, more. But anyway, so the question for us is what we will do, which proxy alias we will take for the Baltics market. And what is the issue between, let's say, those existing now alias proxies? So they do not communicate between each other. Let's say it's not possible to make a payment between Swiss and Portuguese. So there's an issue with interoperability. So our thought is how Baltic states, Baltic market to make one single proxy alias, and maybe it is possible to do on the blockchain. So this year we started a feasibility study. Actually, we started under the name like Sweet Alias Proxy on Blockchain, but after the event, at the end of last year, we had a Swish conference. Swedbank ran a hackathon, and actually we got 5 proof of concepts working already on blockchains. Just a technology proof that it's possible to do. So we took it and then continue, because already we understand that the main issue actually it is how does it work like with legal environment. As a technology, yes, it is possible to do, to put, let's say, these aliases on the public blockchain to store it like and to reuse, but how does it reflect if we will take into account legal environment? So GDPR key principles, we identified, let's say, 3 key principles that it's really like challenging blockchain adoption into the market. So actually, this stored personal data cannot be without end date. Right to be forgotten, and data design, protection by design by default. Those 3 actually principles were, as I can say, a headache for us as well in the beginning. So here I would like to share that to together with some external experts, some blockchain and legal experts, we started a few iterations, and we started with the most known, let's say, those public blockchains like Bitcoin, Ethereum, and started like to analyze how it is possible like to do this and to make not just a architecture solution, but as well from legal, how does it look like in legal environment as well. So finally we end up that with public blockchain, if we are putting any personal data in public blockchain, so actually we won't comply with GDPR. Fundamentally GDPR technology says that already stored some data into distributed ledger, it's already immutable. And you cannot like change. So it means that's not okay from GDPR perspective, because data will be stored by identically like time. As well as it is immutable, there is no options to be forgotten, like to erase this data, to change it, and etc. So also is not like okay. And even seems if you there is, let's say, opinion maybe that if any data like is somehow encrypted, hashed, like and stored like in those public blockchains, so maybe it is like okay, and we can say that it's compliant with GDPR. But actually, we got the opinion that it is still personal data. It needs like to treat as personal data, and it's very, very challenging to do. From business perspective, we understand that. Also counted, let's say, made some calculations that it's very expensive, or you cannot control costs of service running costs. It means that in public blockchains, transactions approval time is not known. It depends on those who verifies those transactions, and as well each day it can change the transaction price. Different in different blockchain network, it is like changing. We had, let's say in history, we saw then, let's say transaction for Bitcoin price was close to 50 United States dollars. So to put one alias into for storing and pay such amount of money, it's not efficient. And looking from use cases perspective, we understand that technically, even if the personal data is somehow hashed and stored into public blockchain, it is very difficult, challenging actually to find to make searching for particular like entry into the blockchain. So what we didn't find into the public blockchain, actually we find in this private one, permissioned blockchain. And because data access is shared, or data accesses to this is permissioned to those participants who are in this blockchain, particular private blockchain network, we found the way how with decentralized identity stored information can be compliant with GDPR. As well, it's based on our indicative, let's say, calculations or information what we get. It's more cheaper, let's say, to have this solution than in comparison to store it on public blockchains. And as well, it's important thing that if you are in this participants of this private blockchain, you can influence the future roadmap and somehow control where this blockchain will go in the future, what additional features, services, and etc. will be developed. And as well, what we saw from our use cases that there is a searching like options. So, yeah. So basically, European this regulation, data protection, general data protection, actually is very restricts itself the adoption of blockchain like technology, as we see, and the potential what is possible like to do and to start uses. But anyway, we see that there is like a possibility to collaborate with third parties, to think in a new way, and to find the solution how to use the blockchain technology anyway, and to get the benefit from this open banking, all the what we can get. So after that, finally, we understood that we started with a very simple and from our side seems that very secure use case, just storing the phone number and customer IBAN into the blockchain. And finally, we understand that after this, we are actually building already infrastructure, blockchain platform for data sharing between the financial institutions. So once you will develop this network, later on you can reuse it for other services. Yeah, you can start with this one small step, make this step, check what's happening around, and then to think about what we can do next one. So as it uses open source code, it is very easy to develop. It can be done not just by the members or participants of the private blockchain, but as well from third parties, fintechs, others who are interested, they can provide these additional features or develop it. So it can be KYC, e-commerce, some feature services, government services related with companies registrations, and etc. And finally, maybe it can be done for identity. That's all. Thank you.
My presentation will be in less formal way, so I will open it separately. This is my team. I'm Anatoly Resin. I'm Anatoly Resin. I am a blockchain architect, so I am covering these technologies from inside. This is the essence of what we're trying to explain for those people from business who comes to us as the blockchain architects to when they are in the middle of the hype of blockchain, they are asking, we want to build our business on blockchain and expect sustainable model to obtain profit from the, not only from the ICO, but from the business itself. And despite of that, that I am a blockchain maximalist, and I really believe in this technology, here I'm here to warn you about common misunderstandings, what to expect from this technology, and how really it can be used in your projects. But this is really a big talk. This is only a small part of this big talk, so we cannot cover all these things, but at least I want to argue on the terminology. Yep. To understand really what we can expect. So firstly, this one slide, I really believe that this is readable. A lot of the text on this slide, but really these lines are polished to the shining. So this is the most concise, not the definition of the blockchain. This is the most concise definition of what are people expecting from the blockchain. And really, for some domains, these expectations really could be met. When we're trying to transfer the experience from one completely unrelated area to the other, some of these expectations really are failed. And where is the myth, where is the truth here? Firstly, I want to argue on the terminology. When somebody comes to us and asks us, we want to build our own blockchain, so we will have miners, we will have blocks, we will have transactions. Firstly, about the terminology. The blockchain it's really too narrow term, because there are other systems that really can deliver the same expectations. But there are also another term that is known to you. Maybe so you heard the term the distributed ledger technology. And this is also wrong term, really. It's too wide because of the word distributed. Distributed ledger, it's really ledger technologies, but I want to argue on the word distributed. And firstly, if we will speak about why the blockchain is too narrow, really there exists other things that are really more general case than the organizing information into blocks and organizing these blocks as chain. There are really promising projects that are not using chains. They are using more general data structure as graph. And really the chain is a small example how a graph can be built, but it's really simple, one by one. And if we want to achieve a concurrency, if we want to build really scalable systems, then the blockchains really are irrelevant. There are promising projects like an IOTA hash graph that really inherits all the best parts of the blockchains, but provide more interesting properties. And the word distributed. Firstly, this picture is flying across the internet, and this is irrelevant for the blockchains. So it's commonly known by those who trying to classify our system as centralized, distributed, and decentralized. What does it mean? Really, we cannot compare, we cannot use the same scale to put words decentralized and distributed. Because really, the word distributed means only how your data is geographically located. For example, distributed systems, think of Google, for example. Google is really distributed system, but it is not decentralized system. And the decentralization itself is a thing that how decisions are made. And really, when we say that distributed ledgers, in distributed ledgers, it can be perfectly centralized. And really, it is not bad. It is not bad and it is not good. The question is why do we want to use either distributed or decentralized systems? And unfortunately, really, in all scientific papers, we really are using word decentralized. But for referring the same properties, in all the literature, non-tech literature, and the mass audience, people used to use the word distributed, where really decentralized, I think, is more correct term. And the blockchain term really is used as an umbrella term for all those technologies. And unfortunately, we are forced to use this term also in documents, in legal things, but really, if we want to be more correct, it's not really blockchains, and users should not ask us build obligatory blockchain. And once more about the distribution and the decentralization. Distribution is something that really delivers you speed and efficiency. So for example, why Google decentralized its servers? To achieve speed. But unfortunately, when we introduce the decentralization level, so where each node needs to reach the consensus between other nodes and so on, really it introduces huge extra costs, and maybe it up all the benefits of the distribution. But really, it will add you special properties that are very important for the blockchain, because only this decentralized system can be used for solving those problems of mistrusting parties. When the mistrusting parties want to communicate securely, then the really decentralization is needed. And other aspect is for those who really anticipated that yes, decentralization is something that is really important, and really understand that blockchain technologies are cryptography related. They think that if we use the smart cryptography, if we will use all the things that resembles something from Bitcoin or hash graph, it is sufficient. And the really warning and answer here is no, because the most successful blockchains of Bitcoin, of Ethereum, that are really working and really working in the world, they, beside of the technology that is based on cryptography, they are using economic incentives. Or it could be not economic, but it should be something that is related to incentive, because without the incentive to maintain the network really can be distracted by every evil node. And the Byzantine fault tolerance and such terms, they are not helping if you are not enforcing your blockchain with some kind of incentivization of the nodes. At least you can, so if you don't want to build a public blockchain where anybody could join and be incentivized by some kind of cryptocurrency, you should introduce something that will at least prevent the scam of the network. For example, if we consider such technologies as Ripple and Stellar that are actively used in banking, they are introduced their coin not to be a cryptocurrency. They introduced their coin to be the prevention of spam. So transactions are so cheap, so any user that will want to distract the network, it can spend his money simply to overflood the network, and it should be costly for him. And such type of, it's not an incentivization, it's a kind of punishment, but it's really on the same scale. And really, this is first things that I want to warn you. And really, the same slide as the first slide. But really, these things, these expectations from the blockchains or blockchain-related technologies really can be achieved if the system carefully balanced and has the real mathematical model that describes why this model of this blockchain is stable. Because otherwise, it's simply hype. And thank you very much.
I think fantastic intro proceeding into the panel. So I'll kindly ask Mr. Zilgalvis to take the lead on this, and I'll ask Mr. Denis Filipovs from the Bank of Latvia, Mr. Ases Sauga from the Estonian Cryptocurrency Association. You have one association, Estonia? Okay, very good, very good. So we have the one. Mr. Jānis Graubiņš from the founder of Notaki, but also the member of Blockchain Policy and Framework Conditions Working Group at the EU Blockchain Observatory. Mr. Alexander Zelinsky, the member of Board of Velvet Finance Limited, as one of the incarnations, and Justinas Jurkonis from the Swedbank. So over to you.
Thank you very much. And as we have a very interesting group of panelists, and you've already heard from me, I'm going to move directly into the panel. We heard who our panelists are, so I won't go into introductions, but I'll move very quickly into what are some of the questions that we wanted to discuss. And the first was, to each of you, where do you see the very high potential use case of blockchain in your area? Where could it take off first, and where would you, bet your money on this?
Yeah, thank you. So my name is Dennis. I'm coming from Central Bank. As you know, Latvijas Banka is not a regulatory and competent authority in Latvia. Nevertheless, many of you know me, and there is no doubt for me personally that central banks to play a role, and especially having such a passionate experts to play a role in facilitating innovation and development. Well, my focus and my profile is payment systems. Nevertheless, yeah, sure, blockchain goes far beyond, but at least by now we actively act as a catalyst, and we facilitate and organize discussions on the matter. Well, as regards to different areas, I would say we should separate two things. For central banks and for every public authority, then if we take our internal use cases, then I should say we do not use currently blockchain in our processes. Nevertheless, we actively participate in joint projects of other European central banks and ECB. We actively test technology. We also have hackathons, so central banks also have hackathons. And well, so far, it has not proved to be safer, cheaper, and more efficient for payments. As you know, payments in euro are very fast and very cheap. So in Latvia, we call them zip maksājumi. I would like to highlight this again. And that's really great achievement. But nevertheless, area of securities. Securities lending, collateral management seems to be quite promising. So it's one of basic functions for central banks, and probably after some testing we find that blockchain could be adopted for such kind of infrastructures. There is a lot of speculation about so-called digital-based money, what ECB is actively speaking about, but I would say it's too early to speak about, to discuss this topic. We'll see. Analysis and some work is ongoing within ECB. Maybe in years future we will come with interesting conclusions on that particular topic. And there is another aspect. Indeed, as a public authority, we can actively work in order to facilitate adoption of the technology in Latvia. And I think work is going quite well intensively in Latvia, and we are going into the right direction. We hold one seminar which was well attended at the end of last year. We came to understand where we stand, what is the potential of this technology. It was rather interesting, and I would say that different ministries and agencies are quite active, and they have quite experienced and competent experts.
And moving north to Estonia, to the Estonian Cryptocurrency Association, Mr. Asi Sauga.
Thank you. It's really nice to be here. Yep, my name is Asi Sauga. My background is IT, Ministry of Finance and LHV Bank, and now I'm more freelancer and investor thanks to the cryptocurrencies, mostly. And about the use cases, well, the money itself is a really good use case. It just needs some more time to evolve. but definitely the first and major use case of the blockchain is cryptocurrencies. Then, of course, the development platforms and smart contract field is really great, and lots of potential are there. What I'm seeing, maybe the first, well, the ICO's money raising technologies have disrupted already by the blockchain technology. Next wave probably will come from markets, from a trading part, where the decentralized exchanges and off-chain channels will play a major role. And near future we see really big changes in the liquidity markets, in the cryptocurrency markets. That would be one big field what you monitor. And then, of course, different decentralized identity technologies which are developed in different parts of the world. And more widely, like smart contract technologies.
That's already quite a bit. And so now moving to Jānis Graubiņš, who's both at the EU level, a member of the Working Party of the Blockchain Forum and Observatory, and co-founder at Notaki here in Latvia.
Yeah, thank you. My background is that I established companies that deals with cybersecurity. And actually, the 2 points which I mentioned was just what my colleague said. So first of all, as I have been dealing with Latvia's cybersecurity, I think digital identity is something what has great potential. In specifics, where we see unsolved problem where the blockchain technology can help is for e-voting, because in many member states, this has been a problem because there hasn't been a way to create systems which are secure enough for the government. But the blockchain technology, as it is now, we have seen already like proof of concepts that on a small level, it as a technology using zero-knowledge proofs can be used for e-voting. For instance, there's a case in UK, I think it was in Oxford University, where they tested out and it worked on the small scale. So I think that there should be more and more such use cases. And if we think like from the EU level, like there has been this all the time this problem that people are not very politically active, and on one way it's also because this process is very long. You have to go to the voting booth and it's not very convenient. If we can use blockchain technology, we actually could make the e-voting more often, so people also would engage politically more often there as well. And another thing where I see this great potential, which just my colleague mentioned, is ICO as a fundraising mechanism. So there I see actually two like great benefits. So one is that like it allows like local, really small companies to attract funding. For instance, like a pizza shop. It's your neighbor pizza shop, you want to support it, you want to buy the shares, and through blockchain technology you could do that actually. You would receive a token which corresponds to a share, and you would support that. You would know that maybe that pizza shop will not be like Papa John's, but it's maybe actually good because we all know what's happening now with Papa John's. But nevertheless, if we can support these local businesses, local bakeries, butchers, then actually the environment around us becomes more vibrant, it becomes more secure, and we boost the economy around us. And the second thing, very short what I mentioned, is that it's also very great for illiquid assets, making it liquid, such as like infrastructure projects, for instance, which typically have problems attracting funding. So there I see that using ICOs, it can help a lot.
Okay, and going a little bit different than the order of the pictures, now we have Lev Bas, from the member of the board of the Blockchain Development Association here in Latvia.
Yeah, hi everyone. So Yanis, thank you very much. You kind of underlined everything that we should have talked about right now. But actually, yes, Yanis got a really good point regarding e-voting. Something you don't know, Ukraine just yesterday announced that they have partnered with NEM Crypto, which to first of all test e-voting and then implement it for the whole Ukraine. Ukraine now, as everybody knows, are in distress, and blockchain actually will help it, first of all, to reach people living in excluded regions. Also to combine a transparent and legal voting for everybody who lives in Ukraine and outside it. Also, I have a kind of personal visions of so-called FIT model, which includes which underlines what blockchain actually could help in. FIT stands for fraud, intermediaries, and throughput. Fraud being industries where there is a high chance of fraud. Intermediaries, obviously, where there are multiple stages of a single process, which adds additional cost to the process, like, for example, supply chain management. And also throughput means where there is a high amount of similar tasks that being done again and again and again. And for that one, the medical records, e-health care systems within a government. Thank you.
Very good. And now we move on to Alexander Zelinsky and to the UK, member of the board of Velvet Finance Limited. The floor is yours.
Good morning, everyone. From our side, we work in the field of making online deals more secure and more transparent. And actually, we are working on first blockchain-powered escrow platform for any online deals. And from our perspective, we see possibilities for blockchain technology in three different fields. So first would be changing of paradigm when people are going to offline stores to offline enterprises and offline government services and moving from offline to online. And with that, there is two more questions. So first is anonymization in internet. So that's kind of being one of the biggest troubles out there, that you usually don't know which is a second party in your deal from another side. And most likely it's even in another country. So then you have not a lot of options how to make real secure deal online. And second question would be as well trust building questions, because if you go to online, then one of the first questions would be how can I trust second party? And for that we actually see implementation of blockchain technology in terms of timestamping of everything what goes inside or outside of our system, automation of all processes related to deal flow, as well as smart contract systems, as my colleagues mentioned earlier, which actually means that with preventing of all major online issues which you have, like lack of identification, never knowing what's going on, and pretty high fees on international transfers as well in different currencies, you can ensure that you have one secure platform for all of this.
Justinas, Jokonis, we already heard from you, but from the open banking pilot platforms, is there anything that you would want to add?
Maybe about the use cases, the real one. What we started to look, yes, blockchain, it could be like used internally into the company, let's say for some, I don't know, to change some processes or something like to improve. But as we are looking for those cases, I think it's the most relevant one in order to adopt the technology and to spread it not just in one company, but I don't know, country-wise or politically wise. So those use cases where they require some data exchange or share the data between some financial institutions, what I mentioned already, KYC. It could be like as well this alias already presented like use case. But as well, it can be like additional one related to government like services. It can be, or I believe that it's it could be like useful to have the real-time information about the company registry information and updates about representatives and etc. So from use cases perspective, I think there's like a long list of them. There are many of them, but just I need to check what is the most important. Start from a small step, try, and then adopt this and continue and like expand this. Because if you try with one, I believe it will change a lot. Yeah.
Very good. So, I mean, in relation to the use cases that you've mentioned, or other ones without going too broadly, I mean, as you was just mentioning, what do you see each of you as the main barrier or the main barriers to go to implementation? And do you see something specific that the national governments, associations of banks, others, the European Union institutions such as the European Commission can do to bring down such barriers? Dennis.
We have heard already a list of good ideas, and well, the question is why we do not use them already in real life. And the first conclusion for me, and it was quite surprising to understand this last December, was that one of the major barriers is a lack of competence, of IT competence, because we have quite good ideas, but it's rather difficult to get to the step of preparing technical specifications and start practical work, because blockchain logics, it's a quite specific thing, I would say, and therefore this IT competence is very important. I would also highlight, well, from the Latvian perspective, I must say that I would expect more passionate private sector. In my opinion, it's not passionate enough. Well, if I would say we do not have such a big banks or big bank branches of big banking groups here, comparing to the euro, but still almost every day I can read about kind of startup coming with a new idea, implementing a new blockchain-based solution, and so from Latvia, well, the numbers quite close to zero. So I would expect more. And one more argument to support this, well, our investment and development agency started a discussion with the private sector, with the industry, about market-driven proof of concept. But so far, I know that there is no progress on that. Therefore, I would expect more passionate fintechs and startups there. Well, one more thing, quite complicated one, is still unclarity about privacy. Yeah, we have already touched this topic. So for financial sector, for banking community, it's quite important to keep your data safe. If all the data is available on blockchain, how to ensure that actually each peer receives only that information he should be able to see. And quite important one that you, Petros, already touched is standardization and interoperability. And we have also faced the problem that there is at least free topical platform. IBM, Hyperledger, Ethereum, Corda. Well, what is the best one? When I try something on one, then I need to start at least from the beginning on another one. Will they be interoperable? So for bank or other financial institution, what will be the right choice? And this is quite important thing. I know that you have probably this on your agenda that, well, you do not include that in near future you will need to step in to put more resource on monitoring progress in member states and probably to come with a kind of guidelines or some standardization initiatives in that area. Well, it will be definitely very welcomed, in my opinion. Last but not least, I would like to say that here in Latvia, as I already told, public authorities are quite active, working on virtual currencies topic, trying to provide that clarity you already highlighted. Yeah, definitely, if we want to support this industry, we need to start with the clarity, legal clarity. And there was a working group of experts, virtual currency experts, working group created by the decree of Prime Minister. The working group has already delivered its report with a recommendation to the government. So I hope that during August, ministers will go through. There are also a list of outcomes, follow-ups foreseen for each authority. And as well, there was indeed a part about the blockchain as a technology behind virtual currencies. And some of you were also working together with me on this particular part of report. And well, we concluded and we actually invite government to create a special experts working group who will deal with this, who will prepare ways or scenarios or proposals for the government how to facilitate the use and the adoption of the technology, both to support your initiative and indeed to support adoption of the technology in the public and financial sector in Latvia as well.
Okay, so questions and recommendations noted by the European Commission, now coming from Ase, from the Estonian Cryptocurrency Association.
Sorry, I didn't.
What barriers do you see, and what can be done by who to address them?
Yeah, well, yeah, one of the barriers definitely is lack of knowledge. Education and spreading the information is the best solution here. But even like to be honest, the technology itself is quite young as well. As if you compare it, I would believe that the blockchain technology is at least same importance like radio waves, for example. And if we look into history, then radio waves from the first use case to the mass adoption, it took like 50 years at least. So in terms of blockchain technology, we are still in a really early stage. And even more widely, the technology is there, but the most difficult part is to understand the potential, understand disruption, what the technology will have been made and will made. It involves even how the organizations are working together, because it supports mostly like community-based organizations and activities. It doesn't work so well together with the traditional companies and traditional way of doing business, because yeah, it's much more like community-based technology, and it challenges people to rethink the values, to focus more to the transparency, to the trust, and yeah, it's more like rethinking the attitudes, how we are doing things, how we are doing the business, and understanding about that.
Jani, from a startup here in Latvia.
Yes, thank you. I will mention like two things each about what I have been talking about. So about digital identity, this is something what we have been talking a lot in EU Blockchain Observatory as well. And one of the biggest challenges is GDPR compliance, because if you put something on the public blockchain, it's public, but then the GDPR is coming up with the terms that the user has to be able to delete the information. He must know where the information is stored. And when we look how the public blockchains work, then how can you like know all the miners, for instance, who write the information in the blockchain. How can you make a solution that actually works on such a scale? So what we have come up that now the best solution in order if you want to work with public blockchains is that instead of putting the sensitive private information on the chain, you just put proofs, let's say that to this address it's more than 18 years or whatever information you need without saying the information and identifying the person. So there's actually a solution how you can do that on the public blockchain. And I think that's in a way it's a challenge, but I think that it can be solved like that. And regarding the ICOs, I think that comes together how different EU countries are approaching this. Some countries are saying, okay, so we will consider ICOs and IPOs. But if a company wants to raise a small amount of money, it doesn't make sense because all these legal paperwork, it would cost so much that it's not actually a solution. So as we have seen, a great initiative comes actually from the EU. It's called crowdfunding regulation. And I have heard that there has been also considerations that ICOs could be included into that paper. So if it will be included, actually that will greatly benefit the companies who want to raise money.
Okay, Lev.
Yeah, so as an association, we have been through a lot of meeting, work groups, seminars, hackathons with the government officials, with the Bank of Latvia, with Ministry of Economics, with the Ministry of Healthcare as well, and with the Latvian Investment Development Agency. And we are very grateful for a huge support and interest in this, in our field. And we would like them to be more open and forward thinking in terms of how blockchain technology can be adopted. As my colleague from Estonian Association already mentioned that we make things differently than everybody else is prepared to work. And if you want our technology, you should apply to our rules and invite us to work with you as the European Commission is doing right now. And we were very supportive and willing to offer our knowledge and experience.
Great, so thank you. Nice to hear that as well. And now moving to Alexander.
Yeah, from our perspective, I would say that one of first blocking points why this technology is not going very fast, if you speak about Latvia specifically, would be decentralization of different databases in country. To this moment, if we take example of, let's say, Estonian colleagues, they have governmental approach from 1992 that if you have data in one place already, why should you ask for same data once again? So that's one, and there's another example, like Lithuania did already almost 10 years ago when they created official state registry organization which is responsible for all the registries. And then only based on different projects you ask for permission to access one or another registry, but still it's one organization to deal with. Not as in Latvia we have, I would say, each ministry have multiple databases, and when you want to create different kind of transparency based solutions, then you need to deal not only with one organization but with 5 different. And usually they are not really friendly with each other. So I would say that first is bureaucratical barriers, second is complexity of different databases and not consist one place where to go, and third would be kind of political wish or unwilling to go this direction.
And so the reference to the once-only principle from Estonia, which we're applying now in also EU, e-government initiatives, and this is an area where blockchain and actually help in its design, obviously perhaps more modern blockchain in reaching the goals that the legislators are setting out. And Justina, so you're going to get the last word in this discussion before we move to questions from the audience. So what do you see as the barriers?
Okay, already it's mentioned about lack of regulation or clarity, or because there is uncertainty in regulation, like and to understand how to treat one or another thing, because in Baltics law there is no like clear explanation or based like looking from blockchain perspective and somehow regulation on that, opinion on that. Neither in Europe, European authorities, there is also no, currently at current moment, no guidelines for the blockchain itself. So I hope, let's say, from European authorities that will be taking this action and at least like to formalize some guidelines how to treat this new technology. I know that there is a big list in front of some commissions and etc. Who are waiting as well. Like to explain and to give the opinion, but still, now if you want like to make something real, really need to take away this uncertainty in the regulation, especially from data protection. I think companies, small and bigger, are afraid of mistake because we know what can be like as a result of that. So I don't think that, let's say, current lawyers or the officers like are not smart enough. They are. We got really good like consultations, etc. But we see that from European this regulation there is like a lack or specification onto the blockchain. So this is the aim.
Okay, note taken, though I can already indicate on the Blockchain Observatory and Forum website, you can both find a thematic report on GDPR and blockchain, General Data Protection Regulation and blockchain, and a video, and there's more work coming now. One thing I will also note that it's not just blockchain, it's also big data, it's artificial intelligence, all the decentralized, and I think maybe hopefully using the word correctly, decentralized technologies differ a little bit from the way that the GDPR was written. It was written for the digital world, but a little bit more looking at the siloed storage of data. But actually the spirit fits very much with blockchain. It's the user controlling his or her data, and we're thinking very much, especially smart contracts can allow data in the blockchain 2.0 and the blockchain 3.0 to be utilized. That's why on the public sector side, we're making this push and this demand for the purchase. But I mean, this is a debate, analysis, and technology development that is something very much underway and hopefully going towards fruition, and hopefully with very good results in Europe. Now, maybe most importantly, I still can be happy as moderator that we have about 10 minutes to take questions from the audience. Yes, so is there another microphone? Or happy to. A microphone is coming.
Thank you, gentlemen. A very worthwhile discussion. I just wanted to make one feedback, because in this composition you might not come, anytime soon, maybe together. So what really, I work on many, capital markets projects, and just some feedback, what is really, both an opportunity and what is lacking, in terms of supporting companies going into stock exchange, and what technology could help them and after they go into the stock exchange. For instance, a fantastic opportunity for distributed ledger technology would be like shareholders meetings, from a distance, right? So this, so we still have these, yeah. So we still have these, physical meetings, but how much, dynamic it would be if that was, possibility to participate from a distance and on a, a trusted software, right? So that's one thing. Another thing is definitely, also when you go to a in the stock market, you need to do this, allocation and book building of your shares, yes? And sometimes when it is a private placement process or not, or any kind of placement process, if you use a totally trustable software, also it increases the confidence from the investors. And third area, which I noted actually from the practice, is also one a couple of good peer-to-peer platforms, and they're considering actually going into the also into the regulated market, into the stock exchange. But what really lacks is, again, both a legal and a technical link, how to. They have good clients, real clients, qualifying clients, European Union residents, but they do not want to open these local securities accounts. Let's say it's a big process, but then a possibility to connect these good qualifying clients with custodian based again on a secure, controllable platform. I mean, that's just a feedback from the market, and thank you very much.
Let's maybe take two or three questions and see if there's anyone else. And while the microphone's traveling, I'll just say, and also answer to one of the comments, I mean, we're not going to have a regulation on blockchain. We don't regulate technologies, like there's not a regulation on transistors or on servers, etc. But things like that perhaps could be characteristic of decentralized approaches like smart contracts, ICOs, making it possible to register a transaction in different ways without locking us into blockchain. This is all on the table and your inputs are hoped for. And the floor is yours.
Hi. So one other feedback from a fintech perspective, because I'm running a fintech startup on blockchain. So for regulators or authorities, when we approach in different parts of the Europe, including UK, I would like to see them keep less emphasis on virtual currencies or cryptocurrencies when we talk about blockchain, rather than thinking on the innovation part. Because it has happened that if you are a regulator and you haven't seen something in your life as a test case, and you don't know about it, and I'm talking about it, you come to a conclusion too fast. So it would be advisable for regulators or authorities to think about a solution. If a startup or a fintech SME is coming and giving you any idea of developing something new, which you may not have seen, give it a time between your group and think about it before coming to the conclusion too early. And don't only think about virtual or digital currencies when somebody talks about blockchain.
Okay, that was more a comment, but I mean, I think a valuable one. And then perhaps let's collect a last question, and then we move to the panelists.
Yeah, my name is Laila Medina. I'm from the Ministry of Justice, so it's more from the public sector opinion. And actually, why I wanted to kind of raise a question was the reaction on the Lithuanian colleague who talked about the lack of regulation. Actually, for the last half a year or so, I have been thinking that the legislator will never manage to catch the speed of the development of technology. It has a certain procedures in parliament, in government, in EU, and I think it's more the way what was mentioned by Maris, that we have to take our current laws and think of their interpretation, rather than keep changing them, because then we complain on the other side, the laws are changing too often, and we cannot just follow what's written in the laws and regulations. So my thought is more of thinking that perhaps it's easier to have interpretation of current laws, kind of guidance, putting things together, because soft guidance is more of the consensus of both parties, the regulator, the public sector and private, rather than by the time the law will go to Parliament for the third reading, it will be already outdated. And probably the parliamentarians in their political deal will make some mistakes in any case. You will not be happy at the end of the day. So that's more of possibly also some modern thinking of what is the legislator's role in all that thing.
Oh, Asif from the...
Yeah, I totally agree that regulations are really slow compared to real development schedule in the blockchain field and more widely technology field. And even the speed of the development will grow exponentially as more and more really wise people are coming into that technology. But to be honest, actually the blockchain, my belief is that the blockchain doesn't need regulation because many reasons. It has, first of all, it has a lot of self-regulation already built in, so that actors can't act wrongly there because of the punishment methods and different incentives, which are all cryptographically protected. So yeah, there is taken to minimize. There is created the situation where is the minimized way of creating false transactions or attacks. And if you look a little bit back to the history, then we can probably say that the current two main success stories regarding the blockchain technology are hardware development because of the miners' incentive, because of the incentive to mine currencies. There are huge evolve of hardware development. Before the blockchain was the gaming industry, major driver of that now is the mining industry. And another success story is disruption of fundraising, ICOs, and they both are working really well. Well, the ICOs, there are some improvements, of course, but the market have been regulated by himself really well still. And they both are really good success stories, and interesting thing is that they both have done it without any regulations. And yeah, let's see what the future brings.
Any other comments or questions to the other panelists?
Yeah, I also would like to comment on the note that regulations are being slow to adapt to upcoming technology. Yes, on one point that's true. On the second point, regulators, people who are responsible for adopting and accepting those are slow themselves. Don't you think that the whole industry must innovate, because the regulations are accepted kind of 93 BC, and I mean the date of the year 93 BC, where we could actually digitalize the voting system on the certain regulation. That would be also be helpful and speed up the process. To Latvian Ministry of Justice, last time I checked, I needed to physically be present at my notary to sign a translated documents by hand.
That's changed.
Why?
That's already changed. From 1st of July, that's changed.
Okay, yeah, that's 1st of July in 21st century.
Yeah, well, but still.
Thank you.
Other comments or last words in the panel?
Well, if you allow briefly reflect on that, to protect regulators and competent authorities. Well, we are developing, we are adapting. Central bank, for example, is extending scope, covering now not only, for example, market participants, but ecosystems, new different approaches, fintechs, blockchain, as you see, virtual currencies, and so on and so on. Therefore, this is indeed logical way. We can go for sandboxes. We should move from laws to even not to standards, but maybe to requirements or for standards, guidelines. Yeah, flexible, efficient, fast, but maybe a bit soft instruments to regulate this. And as already said, well, there are many use cases where you really do not need any kind of regulation. But still, for smart contracts, for example, you really need this legal certainty and to understand has it legal power or not.
On that, I can also already make you happy that we're analyzing very seriously and taking into account the inputs from the field, from the industry. And though obviously you have the attitude that you could just leave it as code, and code is code, it works. But a lot of people do seem to have the great interest that it would have also a legally binding aspect, not only just be code that enacts something automatically. So we're looking into this. But as I say, this would be into the next college, the next commission. So any other last comments or questions? Or that case, we can close the panel on time or even slightly early. Or Sandra, do you have a last question for any of us?
I actually think the one topic that would be good to touch upon is the e-identity that Yanis was talking a number of times. And we know that after almost a year, 1.5 years of exploring the discussion in the Nordics, 5 biggest Nordic financial institutions have agreed to work together in creating a KYC utility, something that we've been trying from the association side to launch into a discussion mode here in Latvia as well, and most likely we will be delving deeper in the fall, as currently with the new sanctions law coming in force, we actually see quite a demand from the corporate sector to help ease the compliance requirements beyond the financial industry. So as these are the systems that anywhere in Europe or globally, whether Singapore, Hong Kong, Luxembourg, Nordics, are being built anew, what would be your advice on how to think about these, which is a lot about the interconnection of the various registers and being able to retrieve the data by many, many participants on the market?
Comments?
Okay, I can comment a little bit from my experience. I have experience that we've worked with Swiss banks developing EID solutions there, and the most common problem which we saw was that these actually banks, they don't trust each other. So it will be interesting to see how it will develop in Nordics, if they will be able actually to build a solution that goes into production, not only like a proof of concept. Because when it comes to the owner of the platform, when it comes to protecting their customers that they don't switch from one bank to another one, then you have a lot of problems which are not like a technical problem, which are like a business problem basically. And that's why actually I think that blockchain technology is quite great, that you could use that as an underlinement for such a solution. But yeah, it will be interesting to see how it will develop.
And I will allow a few comments from my side as well. We took approach that Airbnb is doing for like last 10 years. So we do identification of person on banking level, because that's a requirement by law from bank perspective to have understanding who is behind the account. And at the same time, we give customers possibilities to show as much information about themselves, like social networks, like different references from third parties. Let's say LinkedIn. LinkedIn references are very good as one of examples that there is a lot of people knowing this person, so we're giving more trust that this person is genuine. And I would say that that's one of ways how like kind of official registry or government-hosted organization could work as well. That there is official part which is accessible by person and giving permission to show that data to public information, and there is like public information which is already there, just combined in one solution.
And then for the last word.
Yep, about the e-identities, that there are really many different projects, e-identity projects, but well, except maybe Estonian one, there is none like really good success story there. And the Estonian one, because it made mandatory by the government for every citizens years ago. And why there are no like success stories there much is that every company wants to make his own standard, his own identity platform, and wants to control it. My belief into the future is that really self-sovereign e-identity solutions are the future, decentralized e-identity solutions where the control of the identity information is owned by the identity owner itself, not any third party. And the biggest project and the farthest project is in that field Ethereum-based Uport, which just a couple of days ago came out with a new digital identity, open-sourced, decentralized digital identity standard. They have worked with it like over a couple of years already, and they have working application out there, and yeah, it's totally decentralized, controlled by the identity owner. Only question is that where is the starting point, and in the starting point there needs to be a KYC process involved. but the platform itself can hold like identity information which isn't controlled by any government or third-party organization, and I believe that's the future.
Okay, so I think all the panelists and the audience have earned coffee, so thank you to everybody, and we have a session still coming after the coffee break.
So great to see all of you here, and there's a nice overflow room with some additional coffee and water where it's actually cooler. So we had some 15-20 people watching the discussion from over there, and we have about 50 from all over Europe following us on the Facebook page. So great continuation of the discussion. So I will hand over to Edgars Pasters, who is the legal counselor for the association, Finance Latvia Association, and Mārtiņš Bērziņš, the Citadele lead for digital channels, right? Exactly. So these two gentlemen are actually very much in the background of the new Cabinet of Ministers regulations on the remote electronic identification. And as I mentioned at the beginning of the discussion, we've actually been getting quite a number of questions from various industry players on the meaning of different articles and what to take out of this. And so we thought this is a good occasion to delve deeper and with the hope that this is all in the interests of the consumers that will not need to go anywhere in person very soon.
The second part of this seminar. I'm terribly sorry interrupting your coffee break, but we hope that our presentation will be worth it. So we both, me and Mārtiņš, had an opportunity to draft the legislation and participate in discussions in the drafting process, and it would be unfair not to share this knowledge and those insights with you. So my background mostly is, before joining Finance Latvia Association, I was a senior associate at Cobalt Legal, and before that, legal counsel to Auditor General, and before that I worked for the Parliament of Latvia, drafting a lot of pieces of legislation, so that's my main business actually, to draft new regulations. And that was an opportunity I wouldn't miss. You remember we met 6 months ago when there was a seminar on 26th of January when we discussed possible solutions and how to shape the new regulation regarding client remote digital onboarding. And now those 6 months has passed. On 3rd of July this year, Cabinet of Ministers passed the new regulation, and today we will look into this regulation and give some kind of commentary to all those provisions put in this regulation. So, when we draft this regulation, some people asked, why do you need so detailed provisions put, because as already some of you mentioned in the previous part of the seminar, technology develops, why do you need to regulate technology? What will be developed will be already old in 1 or 2 months. But, you know, there's 5th IML directive, which says and explicitly demands an express service regulation of the process how the client is digitally and remotely onboarded. So it can't be just only a provision that you should use licensed or sound or proper or safe technology. This technology should be regulated and should be recognized by national authorities. So that is why this regulation was needed, to recognize the methods of remote client identification. The regulation is only for those firms who are subjected to special obligations under IML and terrorist finance regulations. I'll call them obliged entities, as 5th IML and 4th IML directive does. So other firms can follow and introduce the same approach, but they are not obliged by it. So other firms can only copy the same approach, can develop it their own, but this regulation is binding only for obliged entities, not all firms who are onboarding customers remotely. As I always said, the technology always develops faster than law, but the purpose of law is to protect public interest of society. That's why this interference was necessary, and that is why regulation frames the process and methods, but it lets businesses to compete over best technological solution. So it's not framed are only 4 methods used for customer identification, but how to use it better, faster, and cheaper. It's open for businesses to compete on this. We must recognize that remote client identification creates a greater risk than on-spot identification. For example, when the client arrives, probably with not very good things in his mind, probably it could be even a homeless person. Some person is accompanying him and directing him, controlling him. You will notice it at the same moment. We'll call security, ask additional questions, and prevent this client from onboarding. But in remote client onboarding, this is not so obvious, and such client could be onboarded even without noticing it. So you must recognize that such risks exist. They have to be identified. You have smart solutions to identify and prevent those risks, and mitigate the risks, and that's why the basic principles of this regulation is risk-based approach to identify risks and mitigate them, address only key issues, and leave the detail to businesses. So the details are left to businesses, so there is a room for new technology to develop. For example, even blockchain to be used in remote client identification. And of course, this regulation acknowledges the risks originating from such countries as CIC, for example, countries like Russia, countries with high level of corruption, and in those cases, several methods can't be used, or there are some transaction limits put regarding those clients from those countries, or clients whose UBOs come from countries with high level of corruption. So, obliged entities are empowered to choose to which countries nationals it will offer remote digital client onboarding. The regulation doesn't frame a list of countries. Actually, it could be like America, China, France, Lithuania, Estonia, Sweden, but only obliged entities empowered to choose to which countries nationals it will offer remote digital onboarding. And if they choose to, the obliged entity has to know the patterns, fraudulent activities, scenarios existing in those countries. The obliged entity should be demonstrate the knowledge of IDs of those countries, and how to deal with fraudulent activities of those countries' nationals. If the obliged entity can demonstrate that it has full knowledge of that it is allowed to work with the clients coming from those countries. So, moving on margin discretion, only obliged entity decides whether to offer remote digital onboarding and the method to be used. So, from one of 4 methods or 2 methods combined, it's only about obliged entity to choose. Obliged entity is also empowered to cancel remote digital onboarding or ask for on-spot identification at any time without even explanation. So I would like to meet this client in person, that the obliged entity is empowered to ask such thing at any time without any explanation. As I already told, the obliged entity must demonstrate the knowledge to manage and mitigate risks arising from onboarding customers from particular countries, especially countries more to the east from Latvia. And of course, proper and comprehensive risk assessment is needed. It's one of the first conditions to start offering this service. Manuals for fraud, forgery typologies, and new trends, and knowing the new trends is a must. Applicability. This regulation At first, we thought that this regulation could be applied only to private individuals, but actually, at the end, we decided that it could be more efficient that this regulation applies to both to natural persons and legal entities. So even legal entity can be onboarded via this regulation. It applies both to new clients and, for example, a client who was already identified, but, for example, a member of the board has changed and you need to onboard this member of board as well to identify him. So this regulation could be in this respect as well. This regulation doesn't include additional requirements in regards to enhanced due diligence. So those requirements are those who are provided by law or FCMC regulations. For example, if the transaction limit is exceeded, and then you should perform enhanced due diligence. Or, for example, your client is a casino, so that's why you need to perform enhanced due diligence. Some other points. So this regulation does not apply to existing client authentication to access banks' online services. So that's a different thing. It shouldn't be put together. Of course, the method used to authenticate or to identify a client might be affect what kind of tools are accessible to the client when he or she is accessing banks' online services. For example, if the client is onboarded via selfie, this client probably won't get access to qualified identification tools provided by the bank. One more thing that, according to the credit institution law, introducing remote digital onboarding might be affected and might be subjected to the FCMC approval as a new service, financial service provided by for example, by the bank. So the banks usually will be asked to obtain FCMC approval prior to start providing client remote identification. So in regards to methods, probably I'll ask Mārtiņš to continue.
My name is Mārtiņš Bērziņš. I'm head of the digital channels at Citadel Bank. And before jumping into the methods and starting explaining every single of these methods, I briefly wanted to share this thinking behind the process, what we had when we were working during these work group sessions. And I would say that this was really very challenging work because we were trying to balance two things. Technology, which is all the time developing, and this is something what we believe is like opening all the doors. And on the same time, we are regulated by certain laws, and there is like legal environment all around these things. And I think that for me, having experience prior to the Citadel Bank, working also as a board member responsible for AML, for first licensed payment institution in Latvia, FinTech, it was also like a great opportunity seeing not just these technical opportunities, but also talking with Edgars, with other persons involved in this work group to balance really and find the ways how we could move forward with this regulation. So what we had thinking behind this whole thing. So if you are looking at the process currently at the banks, or when we are just, maybe not just a bank, but it could be any service provider, when we face customer face to face, we basically are not having any differentiators. What is going to be the customer requirements, what products or services he or she are going to be using, and so what is this particular risks, this person's risk profile. So we are just assuming that when we do certain, let's say, procedure for the person, the keys to the kingdom are open, and he can do basically everything. And of course, the world is changing, so all the transactions in the world, in our daily lives are changing, and We are looking for service providers who can provide us services, and we can apply 24/7 and start using services immediately. So, and the customers are also, like I said, quite different. There might be somebody who is having necessity, having account for, let's say, average 1,000 euro turnover per month, maybe somebody for 10, 15, and somebody who is having even much larger necessity for the money and transactions. So also the products and also the services, what might be needed for these customers are very different. So like Edgar's mentioned, we had this risk-based approach, and we tried to slice basically all these products and services, including necessity to identify person by the notary. So this law is not just applicable for financial sector. There is really like wide spectrum of the people who are involved and might be using this, so that some of these authentication methods are simpler. Some are requiring highly more transactions, more KYC questionnaire, but it gets kind of balanced. And at the end of the day, the institution or service provider who is running this service is deciding based on his regulatory needs what is best suitable for him. And like also Edgar's mentioned, it's not just like selecting one of these methods. It could be a combination of these methods. It could be something else, but what has the steps included in some of these methods. So I think that was important before we start briefly going through these questions to understand this whole picture, because some of these authentication methods seem simple, some slightly harder. So clearly, electronic signature being one of the methods is not a big surprise. It has been also used in other European countries as well. And we basically are requiring ADAS scheme. And, we know that electronic signature has also a lot of other application forms. We can communicate with the government. There is like different ways of transactions, but currently, at least in Latvia and other countries besides Estonia, Estonian signature unfortunately is not that widely used. There is a certain, I would say, ideas from the Latvian government, and I hope it will really get through and electronic signature is going to get more widely used. But besides the Latvian electronic signature, which is delivered by LVRTC, there also could be other electronic signatures which could be used. So basically we are talking about the CAS, qualified electronic signature, which is required for digital onboarding. Then I think a quite well-known method is also this video identification, which is, maybe some of you have seen the N26 onboarding process. So it's very similar to this Swiss-German model. And it's universal, secure. It could be used by really different service providers, and also when we were discussing in a work group, this is probably one of the solutions what the banks are quite widely going to use. So then inside the law we are also having this identification payment as well as a method. But here it is very important to understand that this method already by law has been created for like smaller transactions, like possibility to taking loans. And the most important here is to remember that when we talk about remote identification or this method used, you cannot really open the account which could be further used for the further identification of purposes. So basically, this is an identification method which stops using this onboarded customer for any other transactions besides the one for which it has been created. So, and last but not the least method, which is also described in regulatory papers, is selfie and identity document photo. So I think here we can see many examples, not just across Europe, but also across Baltics. So here again, we can talk about like low risk, lower volume transaction related business, and it could be basically used also by fintechs, maybe even the banks, e-money institutions, firms. It's just a question what kind of product, what kind of service you are providing with this digitally onboarding process to your customer. So here's like really very long description about the video identification. I believe I'm not going through this. In case there will be the questions, we can dig deeper on this. But in general, idea is that this video conferencing couldn't be interrupted. In case it's interrupted, the process starts again. And also, you cannot really delete this conference. It should have certain timestamps, signatures. It should be kept for validating purposes. During this video call, you are also doing the whole biometry information scan, validation, and running additional KYC questions. Talking about rule-based restrictions. So Edgar's already mentioned that basically any of the organizations should consider who is going to be their customer or who is going to take this service. We are talking about how you can apply and use some of these particular forms like methods like this photo and selfie. We believe that really that it could be more applicable for EU residents, and but like I said, every organization can decide what really is going to be their customers. And I think that what is another interesting thing to mention here, that in regulation there is no any, let's say, levels of money indicated for any of these methods. The only restriction or any threshold that we have been mentioning as a transaction limit is 3,000 euros for PEPs and also casinos, which is already like mentioned in I think other legal documents as well. Yes. And yeah, so basically these are the key things. And back to you, Edgars. Thank you.
Continuing about, for example, PEPs, that probably there are some PEPs here present, and they want to use financial services as well. For example, paying your parking fee using mobile. So that's what was in our mind, that we saw that PEPs shouldn't be restricted from paying parking using mobile. So that's why he can be onboarded in mobile using like bank transfer method, and he could spend like 3,000 euros in a month. If it exceeds that amount, that of course you should be onboarded in a different way. So speaking of PEPs, but not only PEPs or other risk reducing measures, they could be like used a combination of methods. For example, here I see my colleague attorney Maris. For example, what I will do as attorney when I would ask for the payment in advance payment for the client, so from his bank account, and his photo of his passport. So that's about, and probably I'll ask for his selfie as well. So I would see, I should know my client, you know. That's why I would be like using two methods, combination of two methods. That's why I'm mitigating risks, and the bank has checked him, and he has sent me his photo and his selfie. It's useful, for example, for refugee cases I have dealt with in the past. So the person can't be present. He could be like, I need his documents and his information about him before even onboarding him and before he arrives in Latvia. So a combination of methods is possible. Of course, it's possible that you at first onboarded client via bank transfer, but later on the client would like to apply to other services. So that's why you can use video identification later at a later stage, because the client is requires other services that need more secure and more sound identification procedure. For example, like video identification. For high-risk customers from third countries, you know that bank transfer can be used as additional risk mitigating factor, and it's not related to onboarding as well. So, for example, if you're onboarding client on spot, identification on spot, but you can additionally ask payment from other bank where he has an account. So it's a different thing. It's not an onboarding thing, it's a risk mitigating thing, even you have onboarded this client on spot. Regulation allows to monitor clients' digital behavior, his social networking, for example, Twitter, Instagram, Facebook. So watch what you're doing there. Use of artificial intelligence, utility bills, geolocation, compare person's voice available on his blog and provided in video conference while onboarding, and all other stuff. So in regards to GDPR, there is a legal ground to use a lot of data available about this client online. And this is a possibility for new technological solutions which could do the thing better, faster, and cheaper, but with more data, of course. Opening a bank account versus establishing a company. There's a connection. Good, Lila is here. That Ministry of Justice has a good has a proposal to that foreigners can establish a company in Latvia using electronic signature. And from 2020 or something like that, 2020, I'm not mistaken, any foreigner, the only way how the foreigner can establish a company in Latvia will be that he obtains secure electronic signature, for example, in Latvian embassy somewhere, and can can establish a company in online in corporate register. And banks should keep that in mind, that this person would like to open a bank account as well. So probably it will be more useful for him to use the same technology using e-signature. So that's why those two things could need to be put in context when deciding which of four method to introduce in your services. So e-signature will be a must for establishing a company, the only way. And that's why the banks should provide as well this method for client identification as well. So it will be more convenient for the clients. So are only there four methods? Actually, no. Those methods, for example, obtaining selfie and picture of document. You can use any technology in any way how to obtain those two things. Anything. It's like open for imagination. So that's why we can say those all four methods are like exemption from enhanced due diligence procedure. But the way how you get the information asked in those four methods, it's up to you. It's about technological solutions you can provide. But technically, you should obey those four methods. If you don't want to obey those four methods and you use like fifth or sixth method, it won't be an exemption from EDD. So you will have to undergo EDD procedure for each client identified by those other methods. So speaking of EDD, that was the main challenge why this regulation was needed, because only this regulation gives an exemption from undergoing EDD, and as you know, EDD is performed when the law requires to do so. For example, if you are onboarding a PEP, you should this person should undergo enhanced due diligence, but it's not only in those cases. Obliged entities may perform EDD at any time based on fresh information obtained or new risk assessment to mitigate the risks identified in this risk assessment. That's why even this regulation gives like exemption for EDD. It's not like a total exemption. It means if you have new information or good grounds to perform this procedure, you should do it. Speaking of transitional provisions, so at first there's no transitional provisions is in place. So, but it doesn't mean they are not existing there. So new client, new regulation applied. But you know, there are older clients onboarded before this regulation came into force. So if this client has been onboarded remotely in the past, so you either perform EDD, what you should have done before actually, but if you haven't done it, so it's possible, you apply the new regulation. So it can be applied for before this regulation came into force. For those clients onboarded, you can like onboard them like second time, yeah, but using like video identification or any other of 4 methods. So it gives you like a space, flexibility to deal with mistakes of the past. But you know, obliged entities usually are not doing all of those things by themselves. They are outsourcing. And outsourcing is allowed, and there are 2 key issues to address here. So first of all, there is no requirement for a service provider to be registered in the EU. Because if you are reading the regulation, at first glance you may be mistaken. It's not the regulation is not asking for registration in the EU. It's asking that this company who will provide the outsourcing for remote identification should meet requirements arising from EU anti-money laundering rules. So it should demonstrate somehow that it's compliant with them, fit and proper. Speaking of outsourcing requirements, for banks, EBA guidelines and coordination with FCMC might be needed. So for the banks, first, FCMC approval to start client remote identification, and secondly, approval for the outsourcing company as well. So a lot of red tape, you know, but it's worth it. Speaking of state registers, they were mentioned in the first part of the seminar. We really have an issue here with them. There are so many of them, you have to deal with them separately. No need to access population register or other registers to provide the client remote identification. It's not a must, it's not a requirement. You can use it as a risk mitigating measure. It's provided in the regulation as such. But there is no requirement to have an access to those registers, because probably you will onboard Estonian citizen and you won't have any access to Estonian population register. There is a problem still in order to provide a loan or a credit card. A customer who is onboarded remotely, the company should check as a credit register. Still the loan, the credit register asks to do it in a paper form or e-signature. So Latvian Bank was very, it said that this law will be changed, and we already agreed on the proposal how to do it, so it was pretty fast, thank you for that. After that it will be amended, we could provide credit cards and loans filed in this register in more flexible form. Now for the banks it's an issue, because if you want to provide a credit card, there is no way to access credit registry, but it's an obligation for the bank without paper form or e-signature. So selfie or bank transfer is not a solution. So mostly those 2 methods now those methods are more available for non-banking businesses providing loans for customers. Copy of ID. There is one important technical thing prescribed in the regulation that photo of the ID taken by the person is considered as a copy of the ID in the meaning of the AML law. Otherwise, you should like copy it by yourself and sign it via e-signature and then provide to the company. It will be meaningless for using selfie method. So that's why the regulation says your copy is considered a copy in the meaning of the AML law. In case of onboarding illegal entities, some additional documents should be provided. You can provide it via online, via e-signature, or send it via mail, and then, for example, perform video identification. Then the bank employee will have your registering your documents of registration, proof of registration, and will like ask you questions about them and onboard you as a member of the board via video identification. So there might be some issues to think ahead to send the documents to the bank before onboarding a legal entity and only then perform, for example, video identification. And if Martin has nothing to add, there's a question and answer questions. And before letting you ask your question, I was wondering, I really didn't look in the participants list. Is there anybody here who is like a developer who is developing some apps for remote digital onboarding? So, there's like 4 of them. So maybe you will have additional questions. So you were the first. So please ask your question.
Yes, Alexander Zelinsky from Velvet Finance. Actually, one of questions would be how you think about automatical check of person as member of board in official registry. What law is saying on that? So let's example, I am identifying myself as private person at payment institution, and as next step I want to open corporate account. Can I, as payment institution, go to public registry, just check that this person is like with name and ID code is same person which is in registry, and open account based on this, or it's still not enough in terms of AML policy?
Still not enough. You will have to like sign an application that you want to open account as a business, not as a private individual. Probably provide some additional documents prescribed by law, and then the bank will open your account, because it won't be much of red tape there. Regardless of what you say, the bank always will check public register whether you are a member of the board or not. So you'll need to fill some forms, but that's it. So it usually won't happen so automatically. You should provide additional information.
Well, if you may to switch to customer perspective, please correct me if I'm wrong, but if I interpret one article that bank has a right to freeze an account and terminate all the services if it finds problems during this remote identification procedure or just something was suspicious, right? I do not want that Martin takes it personal. Let's think that account servicing payment service provider opened the account for the customer, and then how to explain the customer that he still is protected, and that actually there will be no situation when, for example, due to bank's mistake or error, he will suffer, for example. Do bank will have, or let's say financial services provider, have obligations towards FSA to explain the reason, because there is no obligation to explain the reason to the consumer?
Martin will continue that the provision is, if you speaking of a new client, probably if the client is just like to be onboarded, he will definitely won't have any account. But if it is an existing client, and for example it's a legal entity, and you are onboarding a new member of the board, for example, that could be an issue what we are talking about. The second thing, that customer is onboarded, the account is open, and then bank realizes that something went wrong. Yeah, that
physically identifies himself without explaining a reason. Well,
usually, I think that there is no statutory reason not to explain it, because it's not an AML issue. It's could be a mistake in the indication process. and the bank can say, you know, the regulation ask the bank to refrain from transactions until this issue has been resolved. So you have to come and then, or use other method of identification, or repeat the same one. It's not only on-spot registration as an alternative. You could be, okay, we can do video identification in 10 minutes if you are ready, and or repeat the same identification once more without making the same mistake what we did in the first place. So maybe Martin can.
Yeah, so Edgar's partially covered what I was planning to tell. So basically this whole process is more about the new customers. And you are at the end, you should be sure if you are ready to open an account, if you are the bank or financial institution and you are reporting to FCMC and you are basically taking the whole responsibility or not. So if you are starting this process and by any means you believe that either, for example, these photos or videos were in too dark conditions and the system is not, let's say, fully ready to tell that by 99.something% this is this person, is the same person who he tries to present, you can ask him to either try one more time this particular onboarding method, or try other method, or come to the branch. Because this is really like question about how big risk are you taking, because besides this whole process when you are doing the onboarding, you should be performing also validation of the documents, and you should check if really this passport exists, if this person is capable of doing business and opening accounts. So it's really like accessing the whole databases, what you can gather based on this document set which you are going to use, and then doing a decision if you are really opening this account or not. I cannot really comment about these situations which are happening when already this account has been opened and then by something your bank decides there is like a lot of different procedures, laws and different, and there could be anything, but the most common one is AML related one, why bank's account could be freezed, and we would be probably asking from the person more information on this.
Apart from legal stuff, if I were at the bank and I made mistake, I would like apologize to customer and somehow reward him. So that's like a business thing, how to be nice and decent, not just only legal stuff, and that's all. Yeah. So any maybe some developers, one of them already asked his question. Maybe some other from you. Do you have some first impressions of this regulation? Is it good? Not very good?
Yeah, I want to elaborate totally different angle, because recently I worked with one interesting project. It's called Humanique. It's blockchain solution for identification and financial inclusion of unbanked. And there I was struck that there is like 2 billion people in the world who are unbanked, unidentifiable, and that's like a major problem. And if you would include this, give opportunity these people to be identifiable, to open bank account, it actually makes enormous impact on global economy. And like I think that financial inclusion is one of the key elements in order to reach this sustainable development goal by UN. So I would like you to elaborate more about this ability of companies to choose with whom to work or with whom to discriminate or not to work. You mentioned several times like Russia. There's some, yeah, there's like a lot of fraud in Russia, but there are decent people in Russia. Like I am personally like from Bosnia and Herzegovina. It's probably the last country that will be there applicable, because there is like highly inefficient government. It's mecca for all this corruption. But what I have to do with it? Yeah. So basically, if I have positive record and I want to do business, if I want to be identifiable here in European Union, in Latvia, why there is this national identity playing the very first step of it?
Thank you for the question. First of all, speaking of the bank, from the bank's perspective, if you look, for example, to, I don't know, Revolut or N26 examples of remote client identification as a best, most commonly known examples, they also define the list of countries with whom they are working or not. And for example, in N26 list, Latvia is not on this list anymore. So it's not only about Bosnia and Herzegovina, it's also about Latvia. Yeah? It's not about Russia or other country. It's about, is this current financial institution able to mitigate risks coming from this country? Does this institution know how to deal with the IDs of this country? Are those IDs provided in this country secure and safe enough for remote onboarding? Because there are like a list of requirements for those documents as well. So it will be only about up to this financial institution whether they can mitigate those risks or not. Statutory requirements concern only countries with high level of corruption, for example, or sanctioned countries. Then those two last methods, bank transfer and selfie, is not allowed more than 3,000 euros. Apart from this, video identification or electronic signature, there are no restrictions in this regard. So, but usually, I think that most, taking into account Latvian issues with non-resident presence here, so it will be probably a pretty conservative approach at first. At first the European countries or Baltics, and after that only third countries. Martic, maybe more.
Yeah, so yeah, that's true that we mentioned maybe for certain methods these exclusions, right? But what is again important to understand, what are these risks which Edgar's mentioned, and when we talk about these risks, it's a question about how big money are we talking in these cases. So if we talk like about this, maybe some micro payments, or if we believe that this is a tourist who is traveling, of course there needs to be like the simplest onboarding as possible, and possibility to provide certain payment methods. It could be payments using phones. Obviously the NFC is growing, and it could be that maybe there is no credit card involved, there is maybe some kind of virtual debit card or maybe even physical card. But this is up to really the service provider to decide what is going to be my product, what is going to be my service, what is my business case, and who are my customers. And then, there has been also several references on the slides as well, there might be a requirement to go and discuss this with a regulator. So in case, from some perspective, you believe that you can prove that these risks are not high, because it's targeted for certain people, the amount of money is this and this, it might be used by certain merchants, then this is, again, something what you can play with. So I would say that when we talk really about these video identifications, and when we talk about the electronic signatures, it's more like really providing top-level services where maybe customer expects to have quite high turnovers into these accounts. And then, of course, there is like a necessity to decrease these risks.
Let me be a bit cynical. The calculation is pretty simple. For example, I'm a bank. I have like 1 million customers. Customers from Bosnia and Herzegovina could be like 1,000 in my bank, but reports to FIU is 10,000. 10,000 from regarding your country. What would I do? What should I do? of course, if the client base is 10% from the reports I'm giving to FIU about nationals of particular country, of course the business calculation is pretty simple. Offboard those clients, don't work with this country, you can't mitigate those risks, it's not reasonable. It's only losses, not profit. So that's a business calculation. It's pretty simple in this case, and from this perspective, all financial institutions are making their decisions.
Okay, doesn't matter. I'll try to speak loud. So I have a question about this method number 4. Yeah, I have a question regarding the identification method number 4, which is basically identity verification of a person's selfie and identity photo. As compared to number 2, which is video interview. It seems that this method number 4 is somewhat a lesser or a complementary method as opposed to the video interview. Whereas in most other countries, well, not most, but at least in some other countries, it can be used as a main method without any restrictions. Like, for instance, in Lithuania, the selfie method is used without any restriction.
So the law, Lithuanian law, says that after you have done the self-identification, you should sign it by electronic signature. In Latvian law, just a selfie and the document scan, no signature.
May I explain? It's not a complementary method. Video identification, where you provide your document, is one method, separate method. The method that you're taking selfie and photo of identity document, like you do in Revolut application, mostly of them here present probably have done it. In this case, it's a separate method. Only 2 restrictions apply. First of all, to countries with like higher risks of AML, like high corruption level, sanctioned countries. So to nationals of those countries, this method does not apply. And the second restriction is for PEPs, for example, PEPs or other entities who must undergo ADD procedure, like casinos, for example, as I have already mentioned. For those, there are like a volume limit for 3,000 euros in a month. Apart from that, it is a 4 separate method. It's not complementary to video identification. And without e-signature, like in Lithuania, as Martin told. There was one more question, yeah? So the last 2 questions. So. And
thank you. Yeah, I just wanted to ask, why have you not considered such widely used methods of identification as a fingerprint recognition and voice recognition? What about those 2? Because for sure I know that in the UK, for example, they're very widely used.
Yeah, it would be great.
I think we'll just...
Name the question? Okay. So the question is about, like, once we onboarded the customer, there is a need further to do some activities with the customer, like make payments, change contract conditions, and how the customer could use non-qualified authentication means for this purpose, like, let's say, PIN generators. Since, like, electronic documents law says you have to agree in written form in order to further to perform some transactions or use, like, qualified electronic signature. And same goes for authentication. Yep.
So regarding the first question, the answer will be the first question. We would like to provide this biometrics as a method of identification of the person, but there's one difference between UK. UK government has provided a database accessible to compare, is my face the face which is stored in the governmental database, or fingerprint stored there, is it my fingerprint? And as we lack such an infrastructure here, or such an opportunity to use biometric data even for AML purposes in banking, So that is why this method wasn't included, but it would be great to include such method, but it's upon the government to use biometric data for such purposes. If our government will be ready for that, we will too. And the second question, probably it concerns like...
So I just will try, because I didn't catch the whole idea. So idea was that I have been onboarded, but I would like to change certain conditions, and then I need to give a consent, which currently by law requires electronic signature or paper written form, right? So here we are basically thinking that there is like initial terms and conditions, so there is like possibility to agree when you are introducing certain electronic services, also like the banks does, and there is other service providers. You can agree what is the methodology, how you are going to sign these documents. It could be like your PIN, which you have created, for example, by using mobile application or any other way. So besides these traditional ones, when you are opening and creating the terms and conditions with a customer, you are having this contract, you are agreeing, and basically customer then needs to agree. If this has not been agreed, then yes, then all the changes could be done either by having face-to-face meeting or by electronic signature or paper signed form.
So the last question.
Yeah, so while drafting the law, did you look at the past use cases like N26 or Revolut to exclude certain nationals from the e-identification process? Because certain of those, like Monzo, N26 or Revolut, few of them include certain nationalities, few of them does not include certain nationalities. So there is no similarity between same. Like for my case, I would say I am an EU resident with an Indian passport. I have a Revolut account, but N26 doesn't give Revolut N26 accounts to Indian citizens. But they look at the same methodology of e-onboarding. So did you look at certain use cases for that, and how did you arrive at a certain decision that, okay, we will go by this?
Okay, thank you for the question. As I already told you, that margin of discretion is upon the financial institution. So this institution can decide whether to cooperate with particular countries, or those country nationals or not. There could be a pattern, or could be, or even not. Like the N26 list and Revolut list, they are different, of course. It depends on the calculation I already told you about how many clients, percentage of the clients on your client base you have, and what kind of problems they are creating. Can you mitigate the risks arising from this country? So it's margin of discretion. There is no legal provision by saying not to cooperate with those countries and cooperate with other countries. The only thing that this regulation include is that you can't use those less safe, less secure methods for countries who can be considered like with high AML risk, high corruption risk, and sanctioned countries. Only those countries, like objective criteria is present there, but no like discriminatory practices, like to add like annex to the regulation say you can cooperate only with those countries or countries include in the EU. So this regulation is pretty open. It's about how you can mitigate the risks. If you can cooperate even with China or with Japan or Australia or United States, India. It's upon the financial institution depending on its risks, risk assessment, and the business model.
We've also committed to finish on a certain time, so we're about 25 minutes over the planned end. Let me give a quick applause to the And in closing, I would just say I think this particular piece of discussion on the remote electronic identification is really a signature piece in the way the industry players across the subsectors came together in Latvia. And in fact, it took us quite a number of public discussions. We started out last year as part of the Digital Freedom Festival discussion on remote electronic identification, followed up with another discussion as part of the Digital Freedom Festival. Then we had an event in Stockholm on Nordic vision of financial industry, followed by a discussion on the 26th of January with a range of partners. And so tremendous thanks to the Ministry of Justice, who's present here, and the Ministry of Finance for taking the leadership and being, through discussions, becoming more and more open and arriving at regulations that we believe actually sets out a very good framework that we will, no doubt, will need to adapt in the months and years to come as the practice shows. But it's really bringing out the best from the industry and the collaboration that we built. So hope with that we build out the same on the blockchain topic as the first part of the day. And as I close, I think would be Christine Emenica is not here, but I told her that I will say thanks at the end. She's left. She's been in the back of organizing and pulling this event together. Tremendous thanks to our partners, Eversheds Bitāns, and of course the European Commission, and to all the speakers and the partners from Latvia, from Estonia and Lithuania. So we are committed to continue these kind of discussions and sharing the experiences, and we are very committed to do this on a pan-Baltic level. So that's how we look at the world. So thanks a lot. And you have... Yes.
Our presentations will be available online on our homepage on Monday. And of course, as we have translated the new regulation regarding remote client identification, it will be available on our website as well. So it's...
joint with the Ministry of Finance info sheet on this particular topic. So with that, let us close, and tremendous thanks for being here.